Hello and welcome everyone to this week's COT review. I'm Thomas from cotbase.com. Today we're going to be looking at the 30th Commitment of Trade Report of 2020. And as we always do, we shall start our analysis by looking at the largest changes in commercials positions. And as you may see, we've got soybean oil on top of our list with a 22% change in commercials positions. And if you look at the charts, it's quite visible to the eye that it is much greater than average amongst the largest changes in the past 1 year. It is bearish, of course, no question about that, suggesting some weakness coming after this rally has been in the market for quite some time. If we move on to the 5 years chart, then we get a chance to analyze the COT Extreme situation, which, as you may see, has been bullish a couple of months ago, just when we reached that bottom in the market. So it has took its effect. The market has started going higher. Now, of course, one might ask whether or not we've reached a bearish extreme. And of course, again, looking at the charts, it's quite visible that we have not. So there's still time and space left for traders to reach their bearish extremes, which translates to the fact that there's some further space left for the market to go higher. The Kansas City wheat is our next market for this review. We have that 12% change in commercials positions, but here you can see that this change, although being larger than average, is nothing too unusual. So we see similar changes quite often in this market. It is bearish, but nothing too large that I would put much emphasis on. So we'd rather just move on to the 5 years chart and see whether or not we have an extreme situation that we can act upon. And the answer is no. Similar to the soybean oil market, we had a relative bullish extreme. Seems as if it took its effect and the market has gone a bit higher, but nothing large or extraordinary that we should act upon. So I would just say, move on and let's see if the next market gives us a better opportunity. And the next market will be palladium, because metals complex and the true dollar index is something for our subscribers. But palladium we can look at, and you may see that 9% change in commercials positions, barely larger than average, nothing too unusual. It is, of course, a bearish COT change signal, but caution is advised, because if we move on to the 5 years chart, you will see that we actually had a significant bullish COT extreme in the market for quite some time, which, as you may see, has influenced the market, and we see prices going much higher now. So, and we are not at any bearish extreme, no question about that. So you can see from January of 2018 how much space is left to reach those all-time COT extremes, and that just warns you not to act upon a 9% bearish COT change signal. Moving on to large speculator COT extreme, we've got the dollar index on top of our list with 136 report extreme. I would like to draw your attention to commercials who are at a 330 extreme, 330 report extreme, but most importantly, small speculators who are at a 510 report extreme. As you may see, the past 5 years, they never really were net short, but they are now. So they are very pessimistic. They see the dollar as a market that will go much, much deeper. And of course, judging by recent price action, that's something that could be in the cards. Nevertheless, the report suggests that there's a bullish extreme. And as you may see from this period, which actually took quite some time to develop, but that was a bullish extreme and eventually pushed the market higher. So we are at those levels. I'm not saying it can't grow even greater, but we can just simply state and analyze and come to the conclusion that the dollar index is definitely in a bullish COT extreme territory. Dollar index, the true dollar index, we're going to jump over that and arrive at the euro market, where a 116 report extreme can be found in large speculators, but most importantly, an all-time COT extreme in small speculators. So they have never been so net long in the euro, meaning they were never as optimistic of future prices for the euro as they are now. That in itself, I would consider pretty bearish for the market. So you may see and, of course, analyze how well bearish COT extremes affected the euro market, and this territory I'm showing to you from 2018, just at that top shows you how well the market reacts to COT Extreme. I'm not saying it's going to suddenly switch trend, and this is the top. Of course, you can never pinpoint that from a COT report, but you can definitely come to the conclusion that stress levels are at their, in case of small speculators, at their all-time levels. And last but not least, let's open copper, where we have 108 report extreme and large speculators. You can see that on the chart over there. No question, another metal market, but in this case, a much more bearish picture. And of course, we can also see that there is some more space left for the market to reach even greater bearish extremes. So we may see the market rise a little bit further before eventually tops out and we can see a switch in the trend. Of course, this is only a brief review of markets. Never forget, there's a lot to do here at COT Base. You can dig deeper and analyze the new COT reports, the other data types, other data sets for that matter, and of course, dig deeper by multiple report change analysis, COT index and COT move index for those who'd like to analyze the COT extreme situation a little bit further in more depth. That's available too. Long-term trend indicator, volume and open interest analysis. A lot to do here at COT Base. I hope you will give it a try if you haven't yet done so. I appreciate your attention. Thank you very much for being with me. I wish you a pleasant weekend and wish to see you next week. Take care. Goodbye.